Welcome, everyone. It's Angelo Robles, founder and CEO at FamilyOffice Association and host of the Angelo Robles podcast. This will be my last podcast of 2022. Don't cheer. It's not going to be my last podcast forever. I look forward to doing more of them. I know we slowed down a little bit the second half of the year, but we want to make those that we do really count. And I'm really looking forward to today's guest. He's one of our all-time favorites, and we've not had him on for probably a good 15, 16 months. So it's been a long time. I highly recommend that you look at some of the past interviews that I did with him. And that will be top 1% investor shares 2023 market outlook. And a lot more than that. We're gonna, if you are 18 to 22 or have children or grandchildren, you're going to want to have them listen to this because we're going to be sharing advice on that perspective as well. And really everything relative to investing and looking forward to 2023, which could be a very challenging year, but we'll see. Part of it's going to depend on the decisions that you make. So I hope you really enjoy this podcast. Oh, and by the way, as you could probably see him now, if you don't recognize him, he's also doing the hat thing like me. That would be private investor J.J. Sowers. JJ, it's so great to have you back again.
Yeah, thanks for having me on.
It's always a pleasure.
I heard you have a nickname with that hat. That's what I heard. A little birdie told me.
Yeah, I kind of been in love with this hat now for about 9 or 10 months. I wonder what that nickname would be.
Should we tell the audience?
You could tell them. It's okay.
All right. I heard that they call you Cabana Mac, especially out in like the LA scene. That's what I heard. I don't know if it's true. That's what I heard.
Well, usually when I'm traveling to Miami and LA, I do tend to take it with me. And it's interesting, I guess, because not too many people outside of Texas or Wyoming, two of my favorite states, by the way, are wearing cowboy hats. I guess you got to peacock a little bit and stand out.
Yeah.
I'll take any nickname, at least, and hopefully it becomes memorable. So JJ, we got so much to talk about, and both of us tend to bounce around a lot. And I mean that in a good way. So for the audience, I would say buckle up. There's going to be questions that are coming from all over the place that will be different than you probably expect. And why don't we start with the dollar? So the dollar broadly this year, in a horrific year for investing, has done well. Yet we keep on hearing these pundits calling for the demise of the dollar. Eventually, one day, they're probably going to be right, unfortunately, but they're not right yet. What do you think?
Yeah, so in 2022, I think one of the big surprises everybody had was how strong the dollar really was. And more recently, it has pulled back some. But if you think about it just in a common sense way, when interest rates go higher, the dollar should have to get stronger. Because the more interest it pays, the more attractive it is. So people would buy it. And also, too, I wonder if the dollar wasn't a flight to safety because stocks are down, treasuries are down, and normally treasuries are a flight to safety, during a stock market sell-off. But it seems like in 2022, for whatever reason, the dollar was a flight to safety. And of course, interest rates getting stronger should mean a stronger dollar. At least what I used to read in the history books as a kid. Now, a lot of things I read in the history books as a kid don't pan out. And a lot of things are coincidences, like all this stuff, like this is an inflation hedge, that's an inflation hedge. Really? Because it was just going up during that time when someone said it was inflation. And then some so-called expert coined an inflation hedge. And then it was named an inflation hedge. And it was repeated thousands of times by people and end up not being an inflation hedge the next time there's inflation.
100%. So, I mean, we have to look at it from a big picture perspective. And my audience knows a lot of the work I do is my disaster prep for billionaires. And a lot of that relates to what I think is a currency play, which is a United States play as well, and a variety of other factors looking more globally. But the reality is the world settles in dollars. Now, yeah, there's elements or forces at work that are looking to change that. And in time, they will. But until that day occurs, the world settles in dollars. The dollar is not going to just disappear or go away as the world's #1 currency.
No, I agree with that. And who's ever had the strongest military historically, as far as weapons and stuff, has had the reserve currency.
You nailed it.
We have the
Yes.
strongest military, and we also, no one ever says this, we have logistics. Just look at the way the United States has so many resources and the way we're surrounded by so many bodies of water. It's not so easy to get to us either.
Yes, there's other areas of concern from a military perspective. I guess hypersonic missiles, where we're not necessarily the best, but shockingly, we're actually making some inroads in that. We'll have some military experts on to discuss that topic and others related to this as well, and how it circles back to investing. So I haven't looked at it in a couple of days, but a lot of us will look at the dollar through the Dixie. And again, I go back to the world settles in dollars. Now, there are forces at work. We could argue the IMF, the Bank of International Settlements, there's a whole bunch that probably would like that. These are organizations outside the US that would like that to change. And I do believe there will one day be a more of a basket of probably digital securities that will make that up. What do you think, and how do you think that could play out?
I definitely think that could play out that way. But the one thing I think we've learned through history, that these fiat currencies as reserve currency, like the dollar, the pound, etc., have never worked throughout time. And even remember back in the day when they first had the euro. I don't know how many nations are in it now. It might have originally been 12, then it was 15, and they said the euro was going to take over. And now we all know that don't work. I mean, what's going to be a better currency if it's just from one nation or country that's going to work? I mean, I know they have that, what's that called, special drawing rights, SDRs.
Yeah.
And, there could be like a basket, maybe when we have CBDCs, of currencies that some things settle in, and then maybe different nations could choose what they settle in depending on what region you're in the world. Or like some people think, and this would make a lot of sense to me, but I just think it would be harder for, how like the Federal Reserves and the people who print money to the base, is a currency backed by a basket of commodities. So remember how when the dollar used to be backed by gold, supposedly in the 70s or something, and then they took it off the standard because somebody wanted their gold, and they said, hell no, and they took us off the standard. I don't know if it was France or who it was wanted the gold. So we could back by commodities, again, a basket of like oil, corn, I guess, gold, and maybe even commodities that are used to make stuff in EVs, like nickel and things like that. But that would just kind of be hard to do because you'd have to rebalance it. And what would be the constituents? How would you weigh it? And I guess they could replace constituents.
And here's an important question to that. If it's commodities, won't it be harder to debase?
Yes, but remember back in the day, like way before many of us were born and centuries ago, I don't think anyone's still living, where it used to be like they had these coins and they were fully gold or fully silver, and they started debasing it, and it was less silver and less gold. So it'd be less of that commodity. Because you know how the banks do fractional reserve banking? Well, you couldn't back any currency by all of gold because there's not enough gold, so it'd have to be like fractionally backed. So you could like fractionally back a basket by so much percentage of gold, so much of this, so much of that, and then as time went on, you could just debase it and decrease the amount of it is backed by it.
Very true.
You could do that, and you could even do like vouchers digitally with blockchain and cryptocurrency, where it's kind of like this voucher represents this deposit of XYZ of gold. So you could basically have like a depository that stored gold, silver, nickel. I guess I don't know how you would store corn without it going bad, but some other commodity in a storage, and this much is really there backing this world, one world currency or new world order currency, whatever you want to call it, world coin. And then I guess if they wanted to base it, you could take so much of it out. Because also too, in all fairness, what if like say something goes up 300% and it changed the weighting? You probably would want to sell some to keep the weighting in line.
Yeah, for sure. And like you said, you had a great comment, one that I've been saying, and I get, yelled at when I say it, but the strongest military has, that's broadly speaking, that usually through history has been the reserve currency of the world. Now, I know dynamics are changing. I know the dollar is not going to be totally dominant forever, but to think that over the next, 1 to 3 years, that's going to change, I see that doubtful. Maybe not 15 or 20, I'll give you that, but it's likely to be some sort of basket. And the dollar, whether it's through the concept of digital, AKA as a central bank digital currency, which likely is inevitable. And you're mentioning, the world coin. And I know to a lot of my audience on the more libertarian front, that's very scary. We'll get a little bit into central bank digital currencies later, but there are some things that do appear to be inevitable, even if they're 20 years out. And unfortunately, that probably is one of them. Could I make the argument, and we're jumping ahead a little bit, that if we have the right leadership in the US, I did use the word there, if, which is probably not going to happen. If we have the right leadership in the US, could we get away with not being a part of that, to sticking to our dollar, let the world run through their central bank digital currency world coin, and we still do things the way we do it? Or do we still need trading partners outside the US where that's not going to be realistic looking a decade or two out?
Well, I guess there's a couple of parts of that question, because for one, whatever all payments settle in, like different commodities, if we need something, if it settles in world coin, for example, then we have no choice but whether or not to participate. Now, each country, even though we have a world coin, they may still have their own coins. And that goes back to my theory of one day going back to the banknote situation, where we have central bank digital banknotes that I've spoken about before, and people always laugh at me, but we're getting closer to it every day. Is that I don't think we can totally avoid it, no matter what our leadership is. And if the main world currency is world coin, if we do anything with other countries, and you know, it's a world global economy now, and we have companies like Apple and all them that do stuff overseas, we're going to have to be mixed up in that. Now, we might be able to keep dollar and have, you know, USDC or whatever you want to call it, Fed coin, as the official currency, even though there is a USDC now, which isn't, you know, Fed coin, something like that. And even with credit cards like Visa and MasterCard might use USDC eventually. We still, for settlements, if they go to, and I actually think we'll go to a dual reserve currency status when it first starts. We won't 100% switch off the dollar. They'll become a dual reserve currency status. And so maybe it would be, you know, United States dollar and this world coin. They'll probably test it out, where like certain countries who says, I don't want to settle in the dollar no more, settles in the world coin initially. And if it seems to work, then it'll start to broaden out.
I mean, I'm assuming part of the challenge with a lot of these emerging market economies that the dollar is doing, broadly speaking, so well relative to their currency that they're just getting crushed. Now, that may be good from the US's perspective or us traveling to some of those countries. But in terms of that is kind of forcing them, for lack of a better word, to look at an alternative. But at the moment, and again, I know this will change, at the moment, there really is no alternative.
Right. We're the best house in a bad neighborhood, or the cleanest shirt in the laundry basket.
Yeah, that's probably not saying much. You know, let's see if we're able to kind of, I don't know if I'd use the word take advantage of that, but have the opportunity and optionality as a country moving forward relative to those issues that we're describing. We'll probably end up messing it up, by the way, but hopefully not. I'll try to be, for a change, maybe I'll try to be an optimist. Before I get to my
theory, though, to your question, you know how all those people, so-called experts, say the dollar's going to collapse, and some of it's probably clickbait and all that other stuff, is that if the dollar were to actually collapse in the way they said, there would be riots in the street, food lines. It would be a civil war within the United States. I actually think that it's very possible. I don't know if this is how they do it. What if interest rates, and I don't know if this is going to happen, but I have a barbell theory that either go back to zero or they go to 20%. What if they go to 20% and the dollar gets so disgustingly strong that for the greater good of the people, the narrative is to take us off the dollar standard 100%, and they test out this world coin? That's how I think the dollar starts to lose its reserve currency status, by getting too strong. Because if it totally collapses, that's not good, not only for us, it's not good for people in the rest of the world either. There are countries that are pegged to the dollar, things of that nature. I mean, it would be chaos.
Yes, utter chaos. And we're certainly living in interesting times, so you never know. I would say related to the dollar and what you just brought up. So, you know, we have tremendous political bifurcation here in the US and truly, really around the world. What we think is bad here in the US is often much worse in most quote unquote other countries. We have a deficit, which is what, tens of billions of dollars. Like, how the hell do we get out of that? And is that going to be impactful to the dollar? Is the only way to get out of it through inflation?
So, yeah, I know a lot of experts like to say that too. The only way to get out of it is inflation, this, that, and the other. So I always question too, how do they calculate the inflation numbers? They change it sometimes with that basket. How accurate is it? Because when they say for housing, don't they just go around and poll homeowners and say, how much do you think you would get for rent? Well, is there anybody even like monitoring these numbers? One guy might say something way too high. One guy might say something way too low. And I would guess most people would underestimate how much rent or overestimate they get. So I don't know if it's overestimate or underestimate the people are doing, because they're probably not done market research to see what the rents even are in their neighborhoods. But I don't know if that's true, because generally when everyone knows something, it's generally wrong. And if you inflate our currency so much a way to get rid of the trillions of dollars of debt, and supposedly there's also shadow debt that we don't know about, off book debt that's not counted. And I know that, like, supposedly there are numbers that they admit's not counted. So how much is not counted that they didn't admit? That they would have to inflate so much that would also cause another problem, whether it be riots in the street, whether it be bread lines, where gas would be $20 a gallon, unless they did price controls, which never works. So just imagine that scenario. So all these things people are saying, are they even thinking them through? Or are they just saying them because some other expert's saying them? Or are they saying them just so people read it and say, oh, this guy's so smart because everybody else said it? But when you really think about it, if all that stuff happened, it'd be a catastrophe.
But I do go back to the question, if it's 30 billion or whatever, I'm sorry, trillion, 30 trillion or whatever it is, we have a massive deficit. Yes, other countries relative to their size do too. Our GDP growth is relatively slowing. Yes, I know it's been quote unquote better the last quarter. And by the way, for context, this is among the last days, I think December 29th of 2022. We have a more people, I guess, dying than being born, or broadly speaking, population in a lot of developed countries is going down. We have an aging population, which is putting stress by them not working and support services we have to do for them. I mean, the deficit, to me, maybe I'm overdoing it, but it appears to be a problem, and I don't know a way around it. Now, this relates to a question that I asked you offline many months ago, when I do that disaster prep for billionaires and I look at the US and, again, military perspective and all that, what is more of a threat? Our horrific deficit that we have, or the issues we have? And I know this is going to be out of left field to our audience, but extracting oil and how important oil is to run so many things in our life effectively, including our military.
So that goes back to something I was going to answer about also getting out of the debt and the GDP. So first of all, these like negative Nancy's or Debbie Downers, they don't think about if we have breakthroughs in AI technology and stuff, we could increase productivity exponentially, increasing GDP. And also too, if they opened up the borders and, they vetted, of course, immigrants, and I'm an immigrant, was an orphan brought to the country by Catholic Charities, is that they brought in orphans and other immigrants, that would also support the system you were talking about. I guess you were talking about the Social Security system. And also too, would increase GDP and productivity, because a lot of immigrants are extremely hard workers. Like in China, you had that 996, that the immigrants don't care about working 8, 12 hours a day, 70 hours a week, 90 hours a week. Like kind of in our culture, it's kind of changed. And with the productivity and augmentation of AI and technology, what if we increase over decades the productivity, increase the GDP? Therefore, the actual debt isn't as bad as everyone makes it out to be. And then you talk about the oil. So that's another thing too. Everybody says, about the oil. I bet you there's way more oil in the ground than we know. And you have to bring on an oil man to get the exact numbers, but we don't have the technology to extract it. Because remember how fracking let them go deeper and it was like a straw and let them go out and get more oil? Mm-hmm. I bet you there's technologies that can be developed to get even more.
And get it more efficiently. But
right. And over time, but not today, alternative sources of energy can also pick up some of the gap. It's just that they just can't do it efficiently and fast enough to get some of these alternative sources. So as you get technology to have more alternative sources, plus more oil, and we're using less oil over time, then it may not be as big a threat as everybody says.
Perhaps not. That's more of an optimistic perspective, and nothing wrong with that. It's good to know from all perspectives, and your opinion certainly matters. And again, to our audience, we're going to cover a lot during this probably near 2 hours. So I'm sure there's going to be multiple things that are going to be of value and interest to you, your family office, whether you're an institutional investor as well. I will one day have JJ back where we actually go over more of how he gave a little bit of his background there, being from Catholic Charities, orphaned in South Korea and coming to the US, the greater Baltimore area. Well, I was going to say many decades ago, but that makes you sound too old, JJ. Not that long ago. I'm your elder, by the way, by far. We will have him on where he discusses how he created his wealth and all that, but that's not really going to be the purposes of today. He's going to be very modest, but I will say this couple of words. I'm being very not correct to him saying top 1% investor. He's much, much better than that. And the opportunity to hear from a real investor who came from nothing and created his own net worth and successes and investment successes, and have them be open and sharing with their opinions is very, very rare, very rare. I hope it's appreciated. And JJ, we appreciate certainly your time. I'm going to ask you this question. We all heard of the great Warren Buffett quote, and it is a great quote: be fearful when others are greedy, and greedy when others are fearful. Now, given my work at Family Office Association and my access to among the most successful people in the world, including billionaires, and the surveys that I do with them, we appear to be in a time when, yeah, people are fearful, therefore be greedy. But I'm noticing the billionaires, from the work I'm doing with them, they're kind of fearful as well. I think there's a chance that some of them are maybe not being totally honest with me, and they're looking at opportunities or have cash on the sidelines that they are implementing, but they don't necessarily want to let the world know what they're doing. What do you think?
So yes, for sure, because why would you tell, just common sense, why would you go on somewhere and tell somebody you're buying something while you're accumulating it? I mean, forget the regulation part, because you don't want them to raise the price. You want to get your position, your full position on, and then have them buy it, take it up. But on the flip side, you might want to scare the public into knocking some more stuff down so you can buy it even cheaper. And then when you buy it, you get a better basis. And then, of course, it's a bigger return. It's just like during COVID, some very famous investors came on causing a monster panic, saying Hilton's going to zero and all this. And then you find out later they're buying it at $2 a share and $3 a share, even when they already had a position, but they were getting a better basis and they had one of their best years ever. And when they came on, they also had some swap position that was shorting the market. That was one of the greatest trades of all time that they exited after they whacked the markets, allegedly.
Yeah, like that's, if I had to give one advice to the general public, which I'm a part of, or even those that are relatively successful, is it is a different world when you're a billionaire who controls capital, you're a giant hedge fund manager, you're relatively that plus a pundit. You do have a voice, and you're likely going to say things that are going to benefit you financially, which may not be what you're actually doing, but it's what you're saying to probably cause either turmoil or the opposite, maybe resting and relaxing during the market when they're looking to do something totally different. So unfortunately, or fortunately, that's just the way the world works.
I know if you look at like the fractals, you know how some people look at the charts and then you have the fractals and all that stuff. It looks like the fractals are saying that in 2023, the NASDAQ may have a monstrous bear market rally before it has a big pullback. That would be funny if that happened. So like now everyone's, because look at the tech stocks like Roblox, Facebook, Coinbase. They've been beaten down. Some of them are down. What is Kathy Woods, I think, ARK down 67, 70% for the year when the NASDAQ's down approximately 30. So if some of the NASDAQ stocks that have been beaten down 70, 80, even 90%, I could see them having a bear market rally of 50% off the bottom before, pulling back to what they should be in the new normal, if you want to call it that.
Well, I mean, that relates a little bit to my next question. So as we're heading down to the final couple of days of 2022, how would you define the market narrative relative to this past year? And I know you're going to be honest, looking back to how you felt a year ago, heading into 2022, what did you get right? And what did you think that you got wrong?
So around November of 2022, I had this conversation with many people. If the Fed actually did what they, everyone said, like Bank of America and Goldman Sachs was going to raise interest rates like 7 times, some of them said more than that. I said, if we actually believe that, then you should sell everything, stocks, cryptos, everything.
Yeah, and that would have been the right move.
And pay the capital gains. But I said, are they really going to do it? So I didn't believe they were really going to do it. I thought they might like do it one time and then say, oh shit, and then reverse course or pause. But no, they kept on going. So now we got to take them seriously. So that was definitely wrong.
Yeah. So I mean you and I discussed that.
That's a really big wrong, because I do feel like some of these things, if we were truly in like NASDAQ bubble 2.0, it may take years for a lot of these things to recover, and some of them may never recover.
Yeah, I mean, what's the statistic again that since 2008, if you take out the FANG, and I guess they've been renamed because Facebook is Meta, et cetera, but you get the idea. If you take out the top 7, the S&P for the last, 16 years, give or take a little bit, has been down. It's been negative outside of those often tech-centric companies, the ones that I mentioned.
Right, because people sometimes forget that the S&P 500 is market cap weighted. So the largest market caps mean everything. Like if a little company could be up 1,000% and it gets bigger, yes, but it doesn't influence the way like an Apple or a Facebook or a Microsoft, something with a really big market cap, especially when they got the trillions, influence the performance of the index, which a lot of people use the benchmark. Now there is an equal weighted S&P 500, and I didn't look up the numbers, but I'd be willing to bet that the equal weighted S&P 500 is outperforming the S&P 500 by a mile in 2022, even though they're probably both negative. Well, obviously S&P 500 is negative, but the equal weight is probably negative too, but I bet you it's a lot less negative.
Well, I mean, you mentioned interest rates and how, even Goldman and others said there potentially could be multiple, like 7 rate hikes in 2022. Obviously, that was more true than not. And again, you admitted that was an area where looking back, you would have done things differently. But again, hindsight's always 2020. Looking forward. Now, I'm going to argue we had a recession. We had 2 negative quarters of GDP growth. That's a recession. And then, yes, it bounced back a little bit come the last quarter that we measured. I get it. But we're in real challenging times here. There's lots of problems. What's the direction that you think? And I know it's a crystal ball question. No one knows. What's the direction you think heading into 2023 that we're likely to experience from interest rates?
Yeah, so I didn't ever answer the second part of what I got right. So I'm going to say I got nothing right enough that mattered. And I did run around saying stuff like by the end of the year, I think oil could be 80. And I think it's less than 80, so it's not exactly right. But now this is a very good but to clarify. Like the pundits who run around saying stuff on TV or wherever, I didn't make a bet in that direction, so I didn't make any money off of it. So saying that is worthless.
Yes,
it's just talk.
It's your actions and what you do.
It's just talk. So really, I mean, I didn't really get anything right in 2022, other than having a big mouth.
I mean, honestly, if I could ask you a direct question from a percentage basis, was it your worst investing year ever?
Yes, by far.
Okay, because I mean, look at it. Equities, bonds, crypto, like everything, I guess, except for the dollar was down. It was really one of the worst investing years of all time.
Right. And then some people will say, well, okay, well, you were like a tech investor in crypto and all this stuff. Let's benchmark you to the NASDAQ. If you beat the NASDAQ by, 200 basis points, you outperform. That's BS too. If you're down a lot, you're down a lot. I mean, it's number of dollars you have, number of dollars then, number of dollars now. So number of dollars now less than you effed up. No excuses. See, that's the problem with a lot of people that, they say all this. And I understand that they're money managers, that they're marketing, they're trying to bring in more asset dollars because they make off the fees. But as a regular investor, people sitting at home said, oh, this is my portfolio. Well, NASDAQ was negative, whatever it is, 30 or whatever it is, or 32 or 30, whatever, and I'm less, I did good. No, you didn't. If you're negative 30 or negative 26 or negative 25, you didn't do good. You fucked up. And
basically, yes.
What you said about the interest rates, so I'm not 100% sure. I have a barbell theory. Either they're going to go way higher than anybody thinks and get out of control, like heading, beyond 10, closer to 20, or they're going to try to take it back to 0. Now, this won't happen overnight, obviously, and it may not happen entirely in 2023. There are some chatter that the Fed's going to pause in 2023 or slow down their increases and then pause. And then the question is, what do they do there? Do they go back? But when I say interest rates, everyone that talks about the Fed, I don't know if they understand that's the Fed's fund rate. I'm talking about the 10-year Treasury. So just because the Fed stops raising rates or pauses doesn't necessarily mean the Treasury goes up or down if they let the market actually take control. Because in the past, and they've admitted when they had the quantitative easing and they were buying bonds, well, that's artificial buying. So without them buying, if they're the big buyer, who's the buyer? So then the market has to find the right price. And if we have some kind of black swan or unexpected, in the past, people flew to treasuries, I guess what they call it, quite the flight to quality. But this year we saw that not the case. What if the 40-year, if you want to call it super cycle bull market in bonds, it basically started sometime in the 80s, is over, and it has to correct. It's my opinion, things always overcorrect to the up and downside. So I just make this number up 6% because as a child, I used to read interest rate should be 6%, money should rent at 6%. I know that's arbitrary, but let's just use that as an anchor point because you know people like to anchor. So that to me would mean that we have to overcorrect beyond 6%. And what if forces really get in control and momentum goes the wrong way and it's 10, then 12 and 20? Now, I don't know if that's the case, and it might not happen in 2023, and I hope that doesn't happen. I actually think, and it could be a confirmation bias because, you know, low interest rates lifts up the price of all assets because of the denominator, that
Sure.
they pause and we head back to zero and we get into central bank digital currencies. They may even be able to have negative interest rates, but that's just a crazy thought. I mean, the more realistic standpoint is probably we settle somewhere between 4 and 6%, maybe ranges for a few years. Because it's just like my one friend said, who actually sold in November, and he doesn't have real large positions, but he had made a decent amount of money in crypto. He said he sold in November because he thought I had a confirmation bias of the Fed never raising rates. So that's why he faded me, because he always would ask questions about crypto and different things, and you know, think about it and do some of the things based on what I said. But he said, you know, this guy has a confirmation bias that the Fed's never going to raise rates, so I'm going to fade him this time, because he said, if you really believe the Fed's going to raise rates, you should sell everything, and he did sell all his crypto.
And he ended up making the correct market call for this
He
past
sold
year.
he sold the F and top of crypto.
Yeah, like, who is this guy? I should have spoke to him. Although I probably would have had too much of a hard head to listen. That's the problem. Whenever I mention interest rates and we cover the dollar, I do have to go into inflation. We covered it a little bit. I'm going to ask a question that you kind of answered, but we'll dive deeper into it. Are you in the Russell Napier camp that sees inflation as a necessary solution, which I know you don't, to over-indebted government balance sheets?
I don't. So, I mean, that there is an inflation too. We have to define inflation. So what your inflation was, my inflation would be different things. And there's different kinds of inflation. There was asset inflation, and we had ridiculous amount of inflation during COVID in houses, in Rolex watches, in baseball cards, in NFTs, and crypto. We had massive inflation, but there's also consumer inflation. And when you go to consumer inflation, that's also very personal. So what one man spends on might be different than another man or woman spends on, or even child, if they have their own, you know, they're spending their own allowance, whatever they get. So inflation is very personal, just like people talk about recession. But recession is very personal too. And I think there was a joke I learned growing up that when your neighbor loses his house, it's a depression for him, but it might be a recession for you.
Yeah, yeah, you could definitely say that.
And not only that, during recessions and so-called depressions, that's where some of the greatest investment gains are made, where people bought low. So one man's, you know, recession is another man's beginning of a bull market. And also, I think a lot of it has to do with your over leverage, because a lot of times at the bottom, it was forced selling. When things are sold at prices that just seem, who the hell would sell at that price? It's because they didn't choose to. They were using leverage, and it was a margin call. Yes,
100%. It's certainly underrated. So like you said, inflation is very individualistic. Governments manipulate it. They appear to be, on the surface, for traditional economics, raising interest rates or have to contain inflation, because they think that could cause, quote unquote, rioting in the streets if a loaf of bread is whatever, 15, 20 bucks and gasoline is $12, $13, God forbid. Heading into 2023, and again, I know it's a crystal ball question and it relates to interest rates, but what do you think will happen with inflation, up or down or neutral?
So I have another thing about inflation too. Restricted waging people's, I always said, what the hell would cause inflation? Who knows? But what if raising people's wages to me seems to cause inflation from a common sense standpoint? Because the average person, like, you know, has a regular 9-to-5 job, when he gets an increase in his pay, he buys more stuff. So at the end of the day, you know, supply and demand within the market infrastructure. So then when they started raising people's wages, we really didn't even see inflation at first. So then we had supply chain restriction. So when you restrict the supply and you make the demand more, prices has to go up. So by restricting supply and raising wages, they caused inflation. Of course, then they'll go back and say, see, all that money printing caused inflation, really? Because they printed money for years and there was no velocity. And now you've caused some velocity, but it wasn't working enough. So now you got to restrict the supply when there's more demand, because you gave the average worker more money. So of course prices are going to go up, because supply and demand was inside a market infrastructure. So now that if the supply chains become less restricted in 2023, and I think we're seeing a little bit of that because I think lumber and all that stuff has come down. You will see, I think, an ease in inflation in some areas, but there may be raises in prices in other areas. But the question is whether or not the media and others choose to report it and point it out. So it goes back to the personal inflation thing. There will be inflation in some things, but not in others. But I do think overall, the general narrative that the media might push is that inflation has paused, or they'll call it remember stagflation term? I think I might have heard that as a child in the 80s or something. I think stagflation might happen, or they'll say it's stagflation, because who the hell knows what even stagflation is? They probably made that name up like the rest of the things they make up. Like, didn't they change what a recession is, the definition? So all this stuff is made up. And then they changed the basket of what is inflation, how it's measured. So that's made up too. So they can make up anything they want to make the numbers say anything they want. I think I read some book about statistics being damn lies by some dude named Dan something. I forget his name. But anyway, you get what I'm saying. So, but I do think overall that what the average person perceives as inflation, they'll be told that it's become, like, I guess, capped off, or it's leveled off, or even decreasing. But I don't know if you ask the average man since, say, I don't know, 1990s, whether or not he feels like we've had inflation, when they said we didn't have none, I bet you the average man would say we had inflation, because the price of his health care went up, the price of his child care went up, and if they had kids. So they would say we had inflation. So do you see how I'm saying it's all semantics?
Supply and demand within market infrastructure, and your explanation of that, I think the last 2 or 3 minutes has been utterly brilliant. So again, hopefully this is a learning point for our audience. And you're never too old to learn. This is not just for the 18 to 22-year-olds, which I've been accused of being more focused on lately. Hey, I'm much older than that, and we still have a lot to contribute as well. Well, I'm not a baby boomer. I'm Gen X, by the way, for those of you that send me these texts and stuff. No, I'm not a baby boomer. I'm not that old. Okay, let's ask a fun question, since we're both sports fans. If I give you a 10-year time horizon, would you rather hold one of the FANG, and I know it's relabeled now, but you get it, one of the that make up the FANG +2, or a rookie Patrick Mahomes card? I'm easily going over 10 years with a rookie Patrick Mahomes.
So yes, but I am biased though, because I have the Patrick Mahomes NFT. Remember, I was on your podcast, and the background on the Zoom was a Patrick Mahomes NFT, which so far has not panned out. Because remember my original thesis of NFTs as digital collectibles, I actually think that will pan out. And then my thesis was, like, in the metaverse, they would be the new Rolexes, where people would want to have the wearables and different things, which was the right concept. But I was wrong on that too, because PFP boom, with like the Bored Ape Yacht Club and things like that, became the new Rolexes of the time.
Yes. But
I do think longer term, the digital collectibles with the NFTs will be right. But it could be a confirmation bias. But I would take and it depends on what Patrick Mahomes rookie, by the way, too. It goes back to supply and demand and market infrastructure. So the ones that have a lesser print, the rarer ones, like the NFT, I think there's 250 of them. The rarer things will be worth more in the long run, if there's a demand, because you can have a low supply of something, say 10, and nobody wants it. So we could make like a JJ and Angelo Cabana Mac Asian Cowboy NFT, and there'd be no demand. There could be like 10 of them.
Hey, what do you mean no demand? There'll be 100 people that will buy.
There'll be no demand, no buyers, 2 buyers, me and you. And of course, there'll be no
we will create demand within the supply and demand market infrastructure, of course.
We'll we'll use technology to clone ourselves like thousands of times, and then there'll be a lot of demand.
Oh, exactly. We're going to get to the next evolution of NFTs and more in crypto coming up relatively shortly, by the way. Do you consider in the years ahead, it may be characterized as another commodity super cycle?
Yes. But the question is, what commodities? So, with this EV revolution and all this stuff, I wonder if certain commodities like nickel and some of the rare earths could become part of the super cycle. But I do believe oil is not going away anytime soon, because all these people who say, oh, we got to get rid of oil and all this stuff, Well, if we did that, we'd all die in like a year because we wouldn't be able to commerce or make anything.
Yeah, 100%.
So the thing is I do believe the commodity super cycle is coming. It may not be the exact same commodities as the past, but some of it may be food, because there may be a food shortage, and I hate to say this, in the future. And I feel like things like gold have been suppressed for like a decade. The price, kind of like the longer the base, the higher the space. I think it was Luis D'Amato, the chartist from Goldman Sachs,
100%.
made that statement. So yes, I do believe we will have a commodity super cycle, but it probably will not play out the same way as the last time, but somewhat similar as far as rhyming with history, but not repeating. But it may not be the same commodities everybody thinks.
Okay, let's jump a little bit into that. You mentioned gold. I was going to get to that. I mean, basically, yes, I do agree it's suppressed. I do agree that inflation adjusted, it's absolutely gone nowhere for over a decade. But there's always booms and there's always bust. If we're going to have a commodity super cycle and gold could potentially be a part of it, could that be a boom that we could ride that wave on? But is that also to have a nasty ending?
So I think it would depend on how high it would go. And there's also, I always say every time a bubble bursts, a new bubble begins. But also inside that longer bubble, there's mini bubbles. So remember how like in 2000, I guess it was 2001 or 2002 to 2008, 2009, the housing bubble had ended and it was a really major bubble. But during that time, we had like the oil bubble, when it went, which I call a mini bubble, that went to 140. I think we had an uranium bubble during that time where I don't know the prices, but it went really high. So I wouldn't be surprised if in 2023, since you're talking about 2023, if we didn't, and I say, I'm not saying it's going to happen, but I wouldn't be surprised if gold hit 3,000. And if it really got out of hand, then maybe 4,000. And yes, 4,000 probably would not end well because it would probably have to retrace because that's just too much. But remember, we've been suppressed basically because it wasn't in like 2011, didn't gold hit like around 18 something, and some people said 1900. And remember, there's three types of gold now, and maybe there was two types then. There was paper gold and physical gold, and the spot price is always should be at a premium to the paper, but I guess it, depending on market forces, it could change. But now I call hybrid gold too, and I know pooled investments have counterparty risk, and also storage investments also have counterparty risk. But there are things in gold now, even with crypto, where you can buy like crypto gold, and it's not very liquid, where if you have enough of it, you can redeem it for the physical bars, and it's regulated by whoever regulates the New York investment regulation. So I actually believe that gold's there.
Hey, what is that, Paxos?
Yes, Paxos.
Yeah.
I like that company as far as the gold goes, and even with the stable coins because they're regulated. But the reason I say as far as the gold goes, because they do things with stable coin that's regulated, but when it leaves their ecosystem and goes into another ecosystem and is exchanged for other things, it may lose the regulation. Now that's not clear, but what Paxos issues, what I'm saying, I do trust Paxos as of today, and I do believe when they say the gold is there, it's there. When they say the stable coin is backed, it's backed. But when it leaves their ecosystem and switching to another, you may lose the backing, which has nothing to do with them, to be clear. So I believe that Paxos is highly regulated, and at this day and time can 100% be trusted. Now, obviously, anything can happen where something happens, it's not their fault. But you see where I'm going with this, like a counterparty thing or something. But yes, so there's three types of gold: the physical, the paper, and also people don't realize the GLD, even though it says it's backed by the gold. I don't know. Because if you read the prospectus, it says if there's not enough gold and need to buy it, they can use paper gold and futures and other means, whatever the hell that means, probably swaps and stuff. So physical gold, when I say physical gold, I mean physical gold, the bars. And yes, if you store them, you have the physical gold because you don't want to store them at your house. But the thing is, you do have the counterparty risk of that storage facility. And pooled gold, you could say, well, I have the physical gold pooled. No, because you have counterparty risk. You don't really own that gold, but that is a way to invest in gold. And maybe you have a little bit in that. Maybe it's lent out and you're gaining an interest rate. Because remember, gold has a storage cost, so that's a negative interest rate.
You mentioned on another commodity that you're positive, relatively speaking, on rare earths, and for good reason. That does appear to be one, from uranium to nickel to quote unquote rare earths in general. But let's go back to something that we've touched on, but really maybe didn't do a relatively deep dive in, and that's oil. So that was one of the correct calls that you made. Others were saying 150, 200 a barrel, probably me too. And you were saying, no, there's reasons why it may be closer to like the number that we're at now as we're heading into year end. Given what's going on with the war in Europe, obviously Russia, the Ukraine, what's going on there, heading into the winter season, all these things, how do you think oil as an investment play? I hate to simplify it only to that perspective, but how do you think that could play out? And I think your answer is going to relate to supply and demand within market infrastructure.
It is. But remember, though, just because someone gets the direction right doesn't mean they made money. That's another thing people don't understand. So let's just say people go long futures contracts and they put up 10% in their own leverage. If it goes against you, you could be margined out, and by the end of the year, you could be right. So I could actually see oil. I mean, what are it, 70 something now, I guess. If you had to force me, I'm going to say it ends the year higher. But before that, in that time frame, I could see us going as low as 50.
Wow.
And who knows? It's dangerous to be throwing out these numbers just for fun. But I could see us going much lower before we go higher. But I would think that we end the year closer to 100 than not. Let's just put it that way.
Okay. Actually, on that note,
closer to 100 than 50, because right in between would be 75. And what are we at? 77, 79-ish. And I don't know if you're talking about Western Texas or Brent, because remember, a lot of people don't know a lot of people look at Brent, West Texas. There's also Louisiana Light Crude. There's Miami. There's all kinds of other ones. But let's just say let's just use West WTI, the Western Texas. Let's say it's approximately, I don't know what it is today, but let's say it's close. It's around 70, between 75 and 80 probably. And also too, when the futures contract expires on the roll, when we look at the future, it's a different number, which could be different. So I'm going to say it's going to be closer to 100 than 50. So it's going to be higher than 75.
And just to give the audience, we still have a long way to go. Yes, we're going to get into NFTs. We're going to get into Bitcoin. We're going to really get some exciting stuff on longevity, med tech, changes occurring in biotech that could be interesting, potentially longer term investment opportunity. We'll probably cover somewhat about central bank digital currencies, China, and really who are the world's greatest investors, because they're people that you don't know. They're not the big hedge fund managers. And some advice for college kids. So we still have a long way to go. It's going to be a lot of fun. I do want to take just a pinch of a break. And you remind me, JJ, just to note to everyone, again, we're recording this on December 29th of 2022. Who knows when you're going to listen to it? Maybe in a couple of days, maybe in a month, 6 months, 5 years from now, and laugh about how wrong we were. I have no idea. But my big point is this is for educational and really more so for entertainment purposes. Everyone has different risk tolerances, different liquidity needs, different perspectives. And anytime you invest, you can absolutely lose money. The moral of the story is this is for entertainment purposes. Do your own diligence, make smart decisions applicably for you. This is strictly for entertainment purposes. And this is from my perspective and JJ's as well. And who knows, our opinions may change an hour from now, tonight, tomorrow, when it's a little bit like poker. You do adapt as new information comes in, which is relatively pretty constant. So again, do your own diligence, make your own decisions. Whenever you invest, you could lose. You need to understand that. Okay, that being said.
Oh, I had another thing to add too. It's the magnitude of your rightness versus the size of your investment portfolio. So you could be right 9 times and wrong once and lose everything and say, oh, I was right 90% of the time and be broke. Or you could be right 1 time and wrong 9 times, but the one right because of the power law was so ridiculously right that you made a ridiculous gain.
Yeah, that's a little bit of the angel and venture capital model. That's a great point. And hopefully the young ones and old ones listening in will really absorb that, because that was very deep. It's not the percentage of times that you're right. It's what was that power law and the exponential on the ones that you were right relative to the ones that you were wrong. What do you think? I think you hinted at some, possibly NASDAQ having a run, then coming down, maybe another recession, again, defined as 2 consecutive quarters, lower GDP growth, et cetera. What are some dominant macro themes that you're potentially seeing or could see heading into 2023?
Yeah, so I think a lot of the macro theme is based on, whatever narrative, I guess, whoever is pushing. But I do think that in 2023, I wonder, you know how everyone says there's been like a pendulum, what is it called? A pendulum shift or a changing of the guard. It does seem like, at least temporarily, we have changed from high flying technology to real stuff. Because I did notice on the Forbes, I think, what is it, 400, the richest guy, and I don't know what it is today, but this was like last week, was the Louis Vuitton guy who has stuff, you know, like the Louis Vuitton clothes, the bag, et cetera, the luxury goods. And the second guy was some industrial dude that I had never even heard of, and he's worth like hundreds of billions. And he passed like Elon Musk, you know, Daddy Elon. So it seems like that we are moving a little bit towards stuff, and that would kind of go to a commodity super cycle. It would go to gold, and it would go to some people talking about now about having investments in infrastructure and things like that. So one macro theme, especially for like, you know, big pensions and family offices, if they're in infrastructure, especially if they can get a yield, you know, a real yield, not like a Ponzi yield, reach for yield, reach for risk, but like, you know, legitimate yield of 6, 7, 8% in today's environment on some kind of infrastructure play backed by the infrastructure, that I do see macro themes heading that way. And even now, like, I mean, treasuries at the 2-year and 1 year in the 4% range. If somebody only goes 1 or 2 years out trying to figure out what to do, you know, 4% isn't too bad, and you're only locked in for 1 year. So if the rates fall, the par value actually rises too. If they fell enough, you could sell out. But if they rise, you only got to hold it for the year and just, you know, redeem your money back and then reassess the situation. And then too, for like high net worth individuals or ultra high net worth individuals, not advice, they got to speak with their you know, financial advisor, their broker about some municipals now have a pretty good yield, especially with the tax benefits.
Interesting.
Yeah, so those are things I've never really in the past few years, other than a municipal I had, just to make sure I had certain income. You know, I'm a frugal person, but just to cover certain living expenses, I've started looking more into some of these bonds on a shorter scale. And I started thinking about too, if interest rates start getting higher, even looking at some of the longer scale, because if I start thinking interest rates are going to fall, if the par value rose enough, I would just sell them for the capital gain and get paid to wait. But I will say this: if interest rates goes to 20% on the 10-year, I will lock in a lot of money on the 20%.
Yeah, no, I don't blame you. And obviously you think we could be heading to another commodity super cycle, whether that's quite 2023, and it's going to depend on the commodities. So that could be an opportunity. And really, anytime there's potential volatility is the opportunity. And we'll get to some of the world's greatest traders that no one knows, investors, traders. Yeah, there's a difference, but at the end of the day, it's going to be what's your return 1 year, 5 year, 10 year, and 20 years relative to a competitor. Whether you want to call that a trader or an investor, I could really give a shit. So part of that is going to be people that are very talented on being active traders in options, in areas of commodities and other things. I think you mentioned one of the greatest traders ever, kind of a little bit unknown, is someone who basically played the options market inside of like just one company and did amazing.
Yeah, so I've heard these stories of a couple of people that allegedly live in like ranches in Montana and are worth hundreds of millions, if not $1 billion, and they just traded options for decades. One of them sold strangles on a company, and another one just sold options because he allegedly used to market make in one of the major companies and was making, you know, ridiculous percentage returns. And people don't realize too, like a lot of these people you see on the Forbes list, they're not as liquid. They might be 5% liquid, and even technically, like say they have like a big company like Facebook, Amazon, Microsoft, if they sold all of that at once, it would kill the stock. It would get halted. So even though it's technically liquid, it's not common sense as liquid as you think. But these guys are like, since they're trading options and you know, they go back to cash once it expires and they close the position, they're like having hundreds of millions or billions in cash. That's rich as AF. That's rich.
Yeah. So, I mean, we're jumping into that subject, I guess, a little bit now, but who you think are the world's greatest investors, and they're wonderful investors, including names that we would all know: Warren Buffett, Ray Dalio, etc. Amazing. And I've been very fortunate to have Ray Dalio speak at one of my Family Office Association events in the past. Now, not as much applicable to what Warren does, but to the hedge fund managers. And I'm based in Greenwich, Connecticut, the hedge fund capital of the world. It's a great business model because of the 2 and 20. And if you have a couple of good years to get traction, a good team that's able to drive assets coming in, and you have that one amazing year when you probably have billions of dollars already of AUM, as a hedge fund manager, you may increase your personal net worth by massive amounts of money. But there are people, as JJ noted, that effectively are their own internal prop, internal small family office, whatever you want to call them, that are effectively just managing their own money. They want to be under the radar. They're able to do small niche things that would be hard to do when you're managing money and you're making your kitchen into a restaurant and you're opening up for others. So there are people, like you said, those traders living in Nebraska and Montana that really are maybe concentrated, maybe too much risk, but if you look at their return profile over a 5 or 10 year period, they literally may be some of the best investors in the world, and we don't know who they are. Well, maybe I know some of them.
And by the way, there might be some like Bitcoin guys who got in like in 2009 when it was like, pennies, that were programmers or got it for free, that are secret billionaires, and we don't even know who they are. We have no clue.
Oh, that is 100%. So if you go strictly by that, whether it's Bitcoin, whether it's maybe Ethereum or Shiba Inu, depending on when you got in and quote unquote, if you got out, your return profile may be so much greater than Warren Buffett's and Ray Dalio. It's not even close. Now, does that make them a better long-term investor over 40 years? Does that make them better for most family offices? Does that make them better at managing risks? Probably not. But if you strictly go by return profile, it's me versus that person, not in a day or a month, but over a multi-year period. There's people that have gotten wickedly sick returns.
For sure.
And, they are out there. Actually, on the subject of kind of crypto and Web3, since I'm the one with this tattooed on his arm, NFT. I don't know if that's the smartest. That was among you could argue among the tattoos I have, that probably is one that I may need to change into NFL, maybe that's what I should do. But no, I'm a believer long-term in the technology, but this has been a terrible, terrible year. Yes, I did get caught up a little bit in the hype and the mania, but that doesn't mean that the underlying technology of NFTs is not going to be incredibly valuable moving forward. What do you think could be the next evolution of NFTs?
Right. So that's a loaded question. And by the way, you know how Daddy Elon said the memes rule the world? In 2023, the sappy seals, pudgy penguins, and the plague, which are all big memes, actually did very well. So apparently Daddy Elon's right. The memes rule the world. And there's something called a Giphy or a Jiffy that the young people really like, that some of them are using. And it's kind of like, I call it a meme, but they call it a Jiffy that those projects use. And a lot of those projects, they call them shit posters, who are on social media just posting all this stuff that we would think is silly, but it really shows that, hey, we're getting old. What do we know? But NFTs, I think, could go many places. So one is the technology. The technology is separate from the NFTs. And by the way, everyone says all these JPEGs, you could right click save and all this nonsense they've been saying. So an NFT is not the JPEG. An NFT is the identifier for the province on the blockchain. But the technology could be used for many things. I mean, everybody always says the technology could be used for real estate deeds, for sure. I think it could be used to trade things. And I think China is making a platform where you can trade copyrights and IP as NFTs. And in the future, we may be able to trade even like our Twitter handles as NFT. So like Daddy Elon and that Twitter Blue stuff, you might be able to take your turn it into an NFT, which also leads into the ENS, where it's like the domains that are NFTs, and there's other ones too, but that'll be tradable. So NFTs is kind of like property, but it's also collectibles, but it also has a technology component. And a lot of people are trying to use like the NFTs as a club pass or an access card. And I do believe there's a place for that. But I said a long time ago, and everyone always laughed at me, that the price of NFTs and the technology being big aren't necessarily the same thing. So someone like Taylor Swift could release NFTs for $5 and sell, 10 million of those things. And then if you have so many of them, you get special perks, like maybe she tweets about you or tickets to her concert. Or if you buy tickets to her concert, you get an NFT that says you was there, something like that. It's tradable. So I really think digital collectibles, and I used to call them digital autonomous fan clubs, and people laughed. And there may even be a social token component where someone like Taylor Swift has these social tokens. And if you have so many token points, and they may not even be tradable, and they may not even be technically on the blockchain, but they'll be part of the digital collectible thing, that if you have so many of these tokens, you qualify for a special NFT, redeem it for a special NFT that gets you special backstage access. And then when you go backstage with her, maybe you get an NFT that says, hey, I was backstage with Taylor Swift, and make up a date, February 14th, since that's Valentine's Day. I think that's Valentine's Day, 2023.
Yes, it is.
And I was there. And there's this company called POAP, which is a great company that people actually commemorate. They call it the bookmarks of your life. So I'm a big fan of that. And that may be incorporated into some of the stuff down the line. Now, maybe it's POAP, maybe it's not. But some of these early, I guess, innovations are going to play out. And I really think this plays out in the digital collectibles and plays out in the fan clubs. And how we have rookie baseball cards. So one of my theses is some of these PFP collections, these companies like Yuga Labs, they have to keep having revenue. So what if, say, the Bored Apes on Ethereum end up being like rookie cards? You know how baseball things have rookie cards, basketball?
Yep,
what
we
if
brought
those,
that up.
But not all of the Bored Ape PFPs are even as valuable as they are today, but certain ones, like maybe the gold ones, the rare ones, or like the rookie cards or the sought after ones. And then maybe there's a trait that's not even as popular now that for whatever reason becomes really popular. And that also becomes like the rookie cards or some of the special cards or the commemorated cards, or like you had the inserts in the basketball packs, baseball packs. So I used to be a sports card collector. I guess that's obvious. So I'm kind of relating it to that. But I just find it hard to believe that all these PFP projects that, anyone can have a PFP project. And if you want to have more revenue, you have to have more PFPs, dilutes the value of the collection. So I look at the market cap. You know how we look at market cap in like stocks and crypto coins? What's the market cap of the entire Yuga collection? Or even just the market cap for the Other Side Deed, or the market cap for the Mutant Ape Yacht Club, or the Dogs, or the Bored Ape Yacht Club? And then when you add it all together, does that make sense? And I really think they're going to have to do something like release other NFTs for more revenue of them to really take the other side to become, say, the next Facebook. I know they say they want to be the next Disney, but I always say the next Facebook.
Well, I mean, that'd be pretty impressive. And that relates to the whole thing. I guess the vision that you're noting, kind of Bored Ape Yacht Club, aka Yuga Labs, and what they did with their strategic purchases and all that. I don't know if I'd say, pardon the pun, put a monkey wrench into things, but it kind of complicated things in one way. But again, the evolution of what NFTs could be. You mentioned membership and perks and the value to a creator, the value to potentially an organization like my Family Office Association as a select membership organization, things that Gary Vee talks about and what he's doing in his restaurant in New York. There is no question. And we didn't even get into, like you said, real estate deeds, stock certificates, passports, driver's license. The underlying blockchain and tokenization and how NFTs are intertwined with that. It's in an interesting time right now. And again, we are getting increased regulation coming in. I guess I'm jumping that gun a little bit. Why don't we pull back a little bit from that? But I do want you to comment on Yuga Labs and potentially how that kind of, altered the course or the timing of how NFTs are going to play out.
And two, don't forget that art also will play into collectibles. So there'll be new artists that will become like the next Picassos, whoever they are. I don't know if it'll be X.
Yes, they are out there. We don't know who the hell they are.
That's going to be, the new kind of art style. So with Yuga Labs, yes, there will be regulation. And I think we do need some level, believe it or not, of regulation. So there's rules and guidelines so institutions and investors know what they're facing. Because right now we don't really know what we're facing. And when I say regulation, I don't necessarily just mean securities regulation. I mean how things are going to be taxed, how things are going to be considered when a transaction happens. What's your IP rights? What's the rights of the buyer versus the seller? Because you know how we have clear defined laws and rights on the things? Is the smart contract law, or is it superseded by, which you would think would be superseded by, as of today, precedents in the court? Is there going to be a new changing where we have hyper crowdsourcing that makes decisions as kind of like a jury on what some of these rules will be? Will there be a new digital council that becomes a new regulator to oversee this stuff? How much does previous or grandfathered law play in? These are all unknown unknowns. And what a lot of people don't realize too, another reason why I call Yuga is trying to be the next Facebook, they're buying things. They bought the crypto punks. They bought 10KTF, just the way Mark Zuckerberg was buying things he saw as the future. I could see Yuga buying other things. And so regulation does play a part, but how does that really shape out what the IP and the lawsuits? Another thing, what if, say they want to be the next Disney, what if Disney was to buy Yuga Labs and Yuga Labs says, okay, you have your IP rights to your Bored Ape NFT and you've been licensing it out, and Disney says, oh no, we just bought Yuga Labs. Guess what? Everything you do, you own us a cut of that by licensing the IP. And companies like Fidelity are trademarking and patenting things for NFTs, and probably other companies we don't even know about. So yeah, I think things are going to change a lot more. This idea of everything being decentralized in Web3, first of all, I think the definition of decentralization might not be right. So I always said decentralization is no single point of failure. I think that's almost impossible to have no single point of failure. I think more of a decentralization with like these NFT projects and these Web3 so-called things, even though it all relates back to Web 1 because we're just building on top of it, is the number of people involved. So the decentralization is actually you and me. If we buy an NFT and then we build something based on our NFT, we're kind of decentralized from the project. Even if Disney buys it and says, hey, you owe us a cut of what you're doing, we're still kind of decentralized.
Yes. Yeah, this is an amazing time. And I know
more like a node in the system.
Yeah, that's a good perspective in terms of looking at. We'll get to Bitcoin and broadly a little bit about the market shortly, but I do want to keep on bouncing around to some degree because audiences are going to be interested in different variations of a topic and want to keep things moving. I did promise, because I've done some speeches at shockingly at colleges and universities. I've done some digital programs. I've done some things for younger people, and I'm fascinated by kind of the 18 to 22, 18 to 25, or even younger in terms of their perspective. A lot of them I find tend to be a little bit negative broadly about the future. They're looking at their college years as being, is it money well spent? That's debatable. What kind of debt are they taking on? And then they're talking to people, investors, and people like me and you, and realizing that what we learned in college had very, very little impact on what made us either happy or successful broadly in our career. Now, maybe we gain independence from parents, maybe we grow up into be quote unquote adults, and maybe we meet a network of people that become great relationships for life and business and money moving forward. I get it. But from strictly an educational perspective, I mean, it's becoming more and more challenging and dubious. I'm beginning to think that among the most important skills for someone to learn really relates to some degree to emotional intelligence, active listening, learning how to communicate, empathy, and I know it's kind of an ugly word, but it's so true, selling. If you're good at those things that I mentioned and can become good in sales, you will make money. Nothing is more important to a company than the people that bring in the money. Whether you potentially become an entrepreneur and are driving revenue that way, or you're inside a company, the more and more I look at it, the more and more I realize the importance of all those things I noted, but really it comes down inevitably to sales.
Okay, so this is going to get me in a little bit of trouble, but 90% of these schools are scams.
90%. Not 50, 90.
Power law. The 10% that isn't a scam are the Ivy League schools. And not because of the education, but because of the alumni, the resources, and the network. The only reason, because you can get a Harvard education for free on the internet, on YouTube, MIT education free on the internet. It's just like now I'm going to start learning in January Stable Diffusion and different AI for free on the internet. I learned coding, even though I'm not a great coder, for free on the internet. I learned all kinds of stuff for free on the internet. You could learn so much for free. I was even a mentor at Stanford business graduate class for blockchain DApps, and I never took a computer science course because I used critical thinking and I learned somewhat the basics for free on the internet. But if you're going in debt and becoming enslaved as an indentured servant for an education at a school that isn't Ivy League and you don't really want to be there, then forget that. The best thing you can learn in school, and I'm sure the better schools may teach this, because I believe Michael Saylor said, when you're interview that he learned to think for himself. So I remember as a child, and I'm actually been remembered recently, there's a book called The Alchemist that I'm rereading because I actually joined this Web3 book club off of Twitter, and we're reading this book. And the guy, one of the main lessons I'm getting is the guy kept talking about your personal legend. And what he means by that is something I used to say as a kid, that adults try to beat the kid out of you. So when you're a kid, you're like, I want to be Superman. I want to be an astronaut. I want to be a Major League Baseball player. And then when you get older, somehow the adults beat the shit out of you.
And if I might add, JJ, to make it a little personal, you wanted to be a songwriter, a musician, and you had that beaten out of you.
Yes. Now, I did have a CD that sold in stores, that literally sold in stores, real stores, regionally. And it did sell like 10,000 copies, which isn't that good,
Nice.
Especially how long it took for. And I did have songs on regional radio and things like that. And I performed it at the Apollo Theater. But people tried to beat the shit out of me. But since I was a really little kid, a baby, I used to say, I want my monies. I want my millions. Well, I should have said freaking billions.
Yeah, you thought too small.
I thought too small.
I mean, broadly I'm asked because of the work I do in disaster prep for billionaires or those that want to be, and I get asked that advice from younger people as well. And I know this sounds very greedy and capitalistic, but I would say generally try to make as much money as you could, probably have multiple streams of income. Listen to the interview I did with Jeremy a couple of months back on what he did, going to college, working in a traditional job. COVID came along. Messed everything up. He went back to North Carolina and he basically got into the Airbnb and the ownership of assets that others don't necessarily want to own, but want to use, AKA rental, from boats to yachts to snowmobiles to etc. And how, he now has $1 million plus a year income and having multiple streams of income, there's other topics related to that I get into, from passports to optionality to a powerful global network. Those will all be very, very valuable things. If you do believe there's somewhat of a global matrix and a way of controlling the masses, you probably can't totally escape that, but you could have the opportunity to have some level of optionality and choices. And I hate to say it, but making a lot of money does potentially help. I just don't know how else to put it. I could try to sugarcoat it, or I could try to be honest with you all. And that's just going to be, from my perspective, at least, an honest answer. Anything else you would add relative to what I would say are the 18 to 25-year-olds, JJ? Any advice that you would give them?
Yeah, so money is a resource. And, if you save and then invest, not just save and hoard, but save and invest excess money. So spend less than you earn and then invest the difference. And over time, the compounding gives you ridiculous amount of optionality. So I always used to say, when I was in my 20s, I mean, it's allegedly I look 28 to 32, but that's maybe people just trying to make me feel good, is that if you do for 3 to 5 years what most people wouldn't do for those 3 to 5 years, you could do for the rest of your life what most people can't. And I'm a lot older than I look, but since I basically was in my mid-30s, I've been able to do what most people can't.
Yes.
That being said, though, nowadays a billionaire is rich. I know your family office thing did some kind of interview or talked to someone that said 750 million. So we'll take their word for it, which is 250 million less. But I always said $1 billion. But just so people know, just because people are worth 8 figures or close to 9 figures, whatever, or been in the 9 figures and came down, you're not actually rich in the scheme of things. There are secret trillionaires out there, and there are families, like royal families that have 300, 900 billion, maybe even $1 trillion, and real G's moving silent. So there's probably secret